Hello folks, welcome to Passive Income Through Rentals. Today's video is about financing your first property with little to no cash of your own. The strategies I'm going to talk about are not pipe dreams, but real doable ways you can use to finance not only your first rental property, but your first couple of rental properties. But before I go into that, I would like to explain why it's beneficial to buy property with little to no money of your own. In the last week's video talking about cash flow, I explained how your cash-on-cash return is improved dramatically when you use other people's money. This strategy is not without risk. Many investors have lost their entire portfolios because they were very highly leveraged. This type of leverage not only magnifies and speeds up your wealth building, but also magnifies your losses.
Why leverage is so important? With leverage, even a small percentage appreciation can increase your internal rate of investment and cash-on-cash returns substantially. Here is an example. If you purchase a $200,000 property with a $7,000 down payment and appreciation is 4%, your equity in 10 years would be worth approximately $118,000, which is an internal rate of investment of 85%.
Let's look at the cash-on-cash return. So the same property, $200,000 with net operating income of $18,000, your cash-on-cash return will be 33%. On the same property, if your down payment is 3.5%, which is $7,000, and everything else is the same, your cash-on-cash return will be 131%. That's a huge difference. Using leverage wisely, living below your means, and having adequate cash reserve will accelerate your wealth building. So how do you minimize your down payment? Let's look at a couple of programs.
The safest and easiest way to minimize your down payment and increase your leverage is by using owner-occupied financing. Many loan programs offer from 0 to 5% down payment. Some lenders will even give you the money to rehab the property, all with low interest rate and high loan-to-value ratio. The credit scores required for these loans are lower than those for conventional loans. And while these loans are not available for all investors, if this is your first investment property, take advantage of the low or no down payment loans insured by the government. These loans are available for owners who plan to live in their property for at least 12 months. If you live in the property for over 2 years, the IRS allows you to exclude from $250,000 to $500,000 of capital gains.
So now that we found out that owner-occupant financing is really good for the cash-on-cash return and your equity, how about maximizing it by, instead of buying one unit, how about buying a fourplex? If you live in one of the units, you still qualified for this low down payment loan. So where can you find these low down payment mortgages? Almost all lenders offer them because these mortgages are actually originated and serviced by the lenders, but they are insured by the government. And when I say government, there are different government entities that insure those loans. from FHA, the Federal Housing Administration, the VA, Veteran Administration, even USDA has 100%, I mean, no down payment loan. Let's look at the FHA loans. These loans are insured by the Federal Housing Administration, and their requirement, I think currently it's 3.5%. And the good thing about this is you don't have to be a low income, or it's not income restricted. There is a mistaken belief that you have to be a low or medium income buyer in order to use an FHA loan. That's not correct. What FHA does have is limit on the price. And the limit of the price, of course, is different for each type of property and each county. And I just wanted to give you an example for the limit for FHA for single family home in Alameda County, California is $765,000, while the limit for single-family home in Hillsborough County, Florida is $331,000. Big difference. And also, the limit is different for a single-family home, for a duplex, fourplex. Here's an example, Hillsborough County. In Hillsborough County, the limit for a fourplex is $638,000. FHA, the benefit of FHA, in addition to the low down payment, that is just easier to qualify than conventional loans, and the credit score requirements are also lower.
If you found a property that will be a perfect rental but needs a lot of work, you can use FHA 2 or 3K for both the purchase and the rehab of the property. The rehab has to cost more than $5,000 and can be as extensive as full rebuild as long as the foundation remains in place. Here are some of the improvements you can make with this type of loan. You can do structural alterations, reconstruction, changes that improve the appearance, replacing plumbing, installing septic and well, adding, replacing roof, replacing floors, etc. You need to locate a lender specializing in these loans. You can search Renzi directory. I will include a link below. We have several lenders listed who actively originate this type of loans. Are you a veteran with eligible active military service? Consider applying for a VA loan. These are the benefits: no down payment, easy qualifying, closing costs can be paid for the veterans. You can buy up to 4 units. The loan is assumable, and there is no mortgage insurance. Find a lender who is experienced in handling VA loans. They know what's required for approval and will guide you through the paperwork. The other lesser known loan is the USDA loan. They offer financing with no down payment, reduced mortgage insurance, and below market mortgage rates. USDA loans are mortgages insured by the U.S. Department of Agriculture as part of its Rural Development Guarantee Housing Loan Program. USDA loans have income restrictions and are generally available only in suburban rural areas.
And finally, the last two government entities that insure low down payment loans are Freddie Mac and Fannie Mae. They also offer loans with 5% down payment. The good thing is they have a higher loan limits than FHA. The bad, they're tougher to qualify for, and of course the 5%, which is higher than 3.5 FHA. So that's it for today. I hope you join us tomorrow at 1 p.m. For Q&A. You can ask questions and connect with others, and next week we'll continue with this topic.